In this tutorial, MetaSwing for Bloomberg, we're going to discuss support and resistance concepts, and we're going to begin with in-bands. Here we have a daily chart of Microsoft with the MetaSwing suite. It's been stripped down just to show the in-bands. And as you'll see here, in-bands are calculations of price volatility, and they contain price. Occasionally, a price will go outside the in-band, but as you'll see, that's usually an extreme circumstance and it's significant. As you'll notice, the in-bands are comprised of 4 pieces. In red, you'll see these are the upper in-bands, the solid line, and within that, close to the price, is a dotted line, and this represents one average true range under the in-band, the upper in-band. And so what tends to happen is as price approaches the in-band, it experiences more and more resistance. So the upper in-band represents immediate resistance on price. The lower in-band is the exact opposite, in that it represents immediate support on price. And here we have an example here highlighted in green. Another one here, another in-band touch. And for the opposite, we can see that once it gets in this ATR range on the upper extreme as well, it tends to reject price. One thing to note also is that touches of in-bands are more significant when you have periods of higher volatility. What's a quick way that you can tell that? Well, the wider apart the in-bands are, is usually more volatility involved in the market. So a touch on a wider in-band area such as here is going to be more significant an event than, say, when in a smaller area of volatility such as here. Here we have a chart of the 10-year yields, and let's just look at 10 years worth of weekly data. And I just wanted to show an example of something other than daily to kind of hit home with the fact that this is a fractal analysis suite of tools that, because they're volatility based, they map out to different time frames, whatever time frame it is. So let's go ahead and zoom in, and we'll walk backwards and look at some examples of how this has worked on the 10-year yields. And we'll just walk forward. As a reminder, you have the lower in-bands, one ATR range within that in-band, the upper in-band, and the one ATR range underneath of that in-band. And as a reminder that these ranges in between the ATR range and the in-bands represent extreme resistance. And so as you'll notice, price falling down, rates are falling, and it hits this lower in-band. Same thing, price traverses up towards the upper in-band. And notice that as an in-band moves down, it tends to have a sharper resistance, almost like a billiard ball is hitting price, or in this case here, rates. Another in-band touch. Sometimes you'll get this where you'll get a right translation that actually misses a peak or a trough and will slide down the in-band. When you use other techniques, maybe possibly such as Bollinger Bands or moving average envelopes, what you'll get is price will supersede those envelopes. And here these are meant to actually contain price, and they adapt as price momentum is increasing. As you'll see here, the in-bands, so far there hasn't been a breach of the in-bands. Then we have another in-band touch here in 2003, upper in-band touch, which causes a pause. And as a side note, if you look at our performance stats, we look at tools and test them extensively to know the known tendencies for each set of tools. And so for in-bands, there are known tendencies and outcomes, and you can kind of plot strategies around that. Perhaps in this instance here, if you played the in-band bounce, you would know to start legging out around here. And one of the things that tend to happen is if you don't get a price rejection and reversing in price, sometimes you'll have this period of sideways movement. So you see here, so far contained pretty well, and we're moved up through 5 years of data. In-band touches periodically. Again here in June. Here we have a right translation again missing, another right translation missing the peak. So although it touched this range, moved sideways for a couple weeks and began sliding up the side of the in-band. Let's travel around again, more in-band touches with sideways movement. Another in-band touch, another in-band touch. And let's look at another example. Okay, here we're going to pull up corn, and we're going to, again, just to kind of augment, or I'm sorry, not augment, but just to demonstrate the fractal ability of the MetaSwing suite, we're going to look at intraday data on the hourly basis. Okay, and once again, you have the lower end bands with the ATR range and the upper end bands. Again, once again, the lower end bands are immediate support, the upper end bands are immediate resistance. As you'll see here, as price hops along here, there's a penetration and then sideways movement. Gets within the ATR range, sideways movement, bounce off the end band, sideways movement, most of the time containing. Periodically, you will see some breach of the end band, and this can be substantial fundamental information. We do realize that technical analysis is not the end-all be-all form of analysis, but you can complement your additional research, and perhaps this is a fundamental shift. And here we have a summary of the general rules for end bands. They are a form of calculation of price volatility. They're meant to contain price. They represent an extreme level of support and resistance on a chart. When the price of securities approaches the end bands, a reversal or at least a pause is likely. And finally, there's a higher significance when the volatility is higher and an end band is touched. Thank you for your interest in MetaSwing and for taking the time to watch this instructional video on support resistance concepts using end bands. Here's our contact information. Please don't hesitate to reach out if you have any questions. Good luck and good trading.